when you're getting referrals, not only from realtors, but your database, but also from CPAs, financial advisors, family will attorneys, and insurance, it's just so much easier to do more production. So I would encourage you to look at 2024. It's just an absolute driver of balance. So then 2025 and 26, you can really scale and go. If you look at a goal of 25 million for 2024, and the whole slow down to speed up, you got to clean up your house a little bit. You got to build a balanced business. You got to get referral streams. You got to turn your folks in your database, wealth partners. It positions you to have the best year you ever had in 2025. Hey guys, Wally Elibiary. All right, so what is 24/7 mindset? Most times when you hear 24/7, you're thinking what? 24 hours a day, 7 days a week, just grinding, hustling. I learned over time, a 24-year career in mortgage and multiple other businesses that I own is, unfortunately, you'll get burnt out. I became an absent father, I became an absent husband, and I became a poor business leader because I was trying to work 24 hours a day, 7 days a week, trying to build a business, maintain a business. When I learned how to work smarter, not just harder, by doing things the best way it could be done, instead of just simply doing my best, I learned how to work only 24 hours a week, 7 months a year, while I got paid from the business residually 24 hours a day, 7 days a week. You can do the same. Welcome to the show. Hey guys, it's Wally Elibiary, 24/7 Mindset. Thank you so much for making time. And who do we have today?
Mike Natter.
Mike, I appreciate your time, my friend. So talk to me a little about how did you hear about 24/7 Mindset?
So my company has their own internal coaching department, and one of the coaches recommended your book. So you should be happy about that. So probably 300-400 LOs that were on the call. And I bought the book.
Was that Kevin or was that Bill?
Bill, I believe. You know what? I don't remember.
Okay.
I probably have it in my notes somewhere.
No,
But there were like 7 people talking that day.
I'm super flattered every time when I see one of Kevin's videos on social. Like he's doing a series right now. Every day he's making a video, and it's my book in his background.
There you go.
I make sure to heart each one of those for sure.
Yeah.
But yeah, then Bill Hart had Bill come out to Dallas to do a 24/7 Mindset live event earlier, the end of last year. He got to play golf with him, and he's I call him the Godfather of mortgage. So he's an absolute just a stud and a half. And then you got Sarah Middleton, which is like a second mother to me. So
really?
you guys have the trifecta of like 3 most amazing people at your company for sure.
Yeah.
So, well, cool. All right. Well, tell me a little bit about your career.
So I've been in the business. I've been in banking for a total like 21 years. I was in private banking with the National Bank back in the early 2000s. They closed our division, relocated it to Texas, believe it or not. I didn't want to relocate. So I had the option. I had my Series 7 and insurance and all that. And then I had all the mortgage folks that we used to refer to driving past in Lamborghinis and stuff back then. So I had the choice. I want to go to the investment end or the mortgage end. And I said, more people are probably willing to borrow than to give. So I went to the mortgage side.
That's extremely well put.
Yes.
Borrow than to give. That's
right.
For sure.
So I started in 2003, strictly doing home equity loans. Because that's the position that they wanted me in. And in 2007, I believe, I switched over to the mortgage side right before the crash.
Got it.
And I've been in ever since.
Yeah, great timing. It's funny.
Yeah, yep.
Yeah. So tell me a little about your volume and what your production kind of looks like.
Historically, I'm a $25 to $30 million producer. This year was embarrassing.
Embarrassing. Not embarrassing.
When I switched from the big banks to movement, my whole 15 to 20 year initial career, 15, let's say, was all sitting in a branch getting leads handed to you.
Yep.
Right. I didn't do any real outbound stuff. I had tellers and branch finance. Everyone was giving me. So when things started getting bad and they weren't closing a lot of loans and pushing away a lot of deals, I went over to movement, and it was a complete flip. I had to restart from scratch. Luckily, I had a manager when I first started that got in my brain, you have to have a CRM and people are your clients. So I came over here with a nice book. But yeah, I went from doing 30 million to about 6 my first year. And then I've been doubling every year. So in 6, 12, I've been up to 25, 35. And then this year was terrible.
Yeah. What do you think? What do you think you closed in 23?
Just about 10 million.
Yeah. I mean that's about right. I mean, I'd say most people have done probably about 30 to 40% of what they did in 2021. So
yeah, and the interesting thing was, I have another coach that I work with, and they really instilled during COVID, pay off your debts, save money, have reserves. So I went into 23 or late 22 with zero debt other than my mortgage. And I had some nice reserves. So in my head, we didn't know how long this was lasting. I think the first 3-4 months of the year, I was just coasting. Like, I have money in the bank. I don't have debt.
Yeah.
I don't really need to worry about it. And that lasted a lot longer than it should.
That's funny. All right. So talk to me a little bit about, so we're going to spend about 15, 20 minutes here of you asking every question and any question that you have. So my goal today is for you to walk away a raving fan of 24/7 mindset. My goal for you today is for you to walk away with clarity, because the more clear I can help you make a roadmap, the more confidence you can have. So what would you like to ask me?
I'd say the most eye-opening thing after reading your book was, I do have the CRM and I have systems in place and I touch base. I have a lot of automations and I'm touching base, and but I really never went deep with them. And one of my biggest things is, let's say I have 1,600 clients in there, maybe a little bit more. Twice a year, I'm reaching out to them through automation, which I believe you said in your book is not your preferred way for annual mortgage reviews, but it's almost zero response. Like, nobody writes back and says, yes, let's have an annual review. The response I've been getting lately is, oh, I got 2%, I'm all good. So that's the thing. Like, I'm not tapping into the book as much as I should. And I do get a lot of repeat business.
Yeah. So one thing, my advice there for you is that you want to change your framing. You want to change, like, for instance, if I showed you a 6 and I showed you a 9, you could argue they're both the same number. Mm-hmm. There's a different way of looking at it. So, which is also in the book. But what the point I'm trying to make is, we saw a big drop off in year 2 annual mortgage reviews and year 3 annual mortgage reviews. So we changed the name of it. So now it's called the mortgage efficiency checkup. Mortgage efficiency checkup. Because if you call someone and they're at a 2% rate and they say, hey, Wally wants to schedule with you your annual mortgage review, I'm like, I talked to Wally a year ago. My rate's still 2%. Why do we talk to Wally again?
Right.
Or if I have the conversation and I say, hey, Wally wants to schedule a mortgage efficiency checkup with you, he sees a few ways for your mortgage to run more efficiently, which would mean more equity that you're able to build up and also pay less interest. Would you be open at Tuesday at 2 or 9 a.m. on Friday? Mm-hmm. Right. So if you change, you can use mortgage efficiency checkup. You can use whatever. You make up your own if you want. But think of something that, to me, efficiency means effectiveness. Right. And effectiveness means like profitability. So when I helped a customer understand, past client understand, the more efficient I run your mortgage, the more efficient I run your wealth, the more efficient I run your debt load, the more effective you can be with the money that you have coming in, which increases your net worth. Mm-hmm. Did I explain that well?
Yes.
Good. All right. Give me another challenge you're running into.
I wouldn't say it's a challenge, but I know you're big into HomeBot. So I started using HomeBot about 6 years ago, and I stopped after several months because I thought the data in there was grossly wrong. Like, it was telling every customer, oh, you could buy a $3 million home. It doesn't take into consideration income, and I thought the values were off. But I just got back into it because I think they made some changes since, and now you can have a video explaining, hey, we could tweak this. And I'm getting phenomenal open rates. It's really, how are you using that data when you're seeing people do stuff to grow the business out of there. So that was something I wanted to pick your brain on. Right. Like, you can see behind the scenes what people are doing. So as a loan officer, without just calling someone saying, hey, I'm spying on you, I see you did this, maybe a technique for that.
Yeah. So what do you say when you get a trigger?
Well, I just started reusing it 30 days ago. So it's, about 45 days ago. So yeah,
you'll get some CMA requests. You'll get some, oh, I want to confirm my value requests. You'll get some exploring the market requests. You'll get some, if a principal pay down request, or, hey, I altered my value or updated my balance. You'll get some requests in there to be able to do that for sure. So what you want to say is, what I say is, hey, Mike, it's Wally. Hey, just touching base with you. Obviously, my job is to make sure your mortgage runs the most efficiently as possible. So that's why I've got you on my software called HomeBot. HomeBot also helps me understand what is of interest to you. So when I got my HomeBot diagnosis on your home, it showed me what was interest, which was ... So I wanted to reach out to you and just simply have a conversation. What could I help empower you with? So I tell them that, I'm there to talk to you about your, technology I've got you on, but I'm here to help you empower it, expand it, inspire it, like whatever word adjective you want to use from there, but help them understand you're there to help them bring to life what they see on the digest.
Mm-hmm.
All right.
So let's see what you can see all the post-it notes happening. So I'm just trying to see. As far as the whole team thing, so the way it's set up where I work is I have a shared LOA. So basically, I'm from app until I submit it for processing, and then I could basically be hands off from processing on your underwriting or closing. Obviously, I'm in with that, but I don't necessarily have a team to. It's basically me and a shared LOA right now. So some of the stuff in your book, that's something I definitely want to grow into. I don't have the volume right now. I did last year and the year before, but right now it's a warrant really.
And whoever had the volume a year ago, it can't really warrant it right now.
Right.
I'll be the first to tell you, a year ago I had a 31-person office. Now I've got a 17-person office. So do what you need to do for you to stay within your budget. And I wouldn't necessarily be, what's sometimes unfair for people to understand is I really blew up my business and expanded my business when the market was going really well. We've had an amazing 10 years in the last market run, right? So it was super easy to expand and to grow and scale and double and double and double because of how great business was. Now, am I doubling in this marketplace? Happens now. Am I doing the 200 million that I did last year? No, probably be closer to about 140. So do I need a same size staff when I'm doing 140 versus 200? No, I don't.
Right.
So it's affected all of us, but you've got to understand that there's peaks and valleys in business. Mm-hmm. So as you go down this road is like, if you've got the peak, go all in, grow the business, grow it, the peaks. The valleys, you've got to pull back. You've got to be smart. And it's no different than us adulting with our own finances.
Yeah. Yeah. And I feel like the systems I have in place and some of the automations, like I could easily handle 25 million by myself.
Love it.
With a shared LOA.
Yeah.
Knowing that if it grew, I'm ready to grow the team,
Good. Yeah. I just say the biggest thing when I'm encouraging everyone in 2024 is how do you get to a balanced business? And how do you go from have you heard of 6-Lane Highway Academy that I built?
Well, I've saw it in the book and some, yeah.
So the 6-Lane Highway is that teaches you got your realtors, you got your database, you've got your financial advisors, you've got your CPAs, you've got your family will attorneys, and you got your insurance agents. So that's the 6. So I would just encourage you to, how do you build a balanced business? How do you take a business that's realtor focused and understand how to turn your database into a data bank? How do you pull out referrals? Even though our production might be a little bit less this year than it was last year, what we still also done, we've been averaging still 120 outbound referrals on a monthly basis, meaning we refer out 120 referrals on a monthly basis. That's what's kept us afloat because our realtors are sucking wind, but we're getting so many different referrals from our wealth partners that, like I said, most loan officers are doing 30-40% of what they did in 2021, where I'm still doing 70% of what I did in 2021, even though it's less. Factually it's less,
But when you're getting referrals, not only from realtors, but your database, but also from CPAs, financial advisors, family will attorneys, and insurance, it's just so much easier to do more production. So I would encourage you to look at 2024 and how do you build it out to being it's just an absolute driver of balance. So then 2025 and 26, you can really scale it and go. Because if your goal is to get to, if you look at a goal of 25 million for 2024 and the whole slow down to speed up, you got to clean up your house a little bit. You got to build a balanced business. You got to get referral streams. You got to turn your folks in your database, wealth partners. It positions you to have the best year you ever had in 2025. Because unfortunately, most people don't have that kind of maturity, that patience, and they're just simply trying to go after and trying to get, as they still think it's 2021. It's just not going to happen.
Yeah.
So
nice. And that's the thing. I have a decent sized book.
1,600 is plenty. That is massive.
It's just they're not responsive to setting up the reviews.
So have you purchased the client concierge system?
No.
All right. So what I'll do is after our call today, I'll email you the curriculum for the 6 Lane Highway Academy. So it's every single week I teach for 90 minutes. So it's a 90-minute week, every week, reteaching you for 90 minutes, number one. Number two, it is also there's courses that go in that. But on the other side of things, there's a client concierge system that we put together. So the system from there teaches you to do how the five-step process for database, turn your database into a data bank, which is the 7-day call after closing, the 30-day call after closing, the 6-month call after closing, the annual mortgage review, and how to do a mortgage efficiency checkup. So both of those would be really helpful for you to kind of understand how to bring that to life. And then also, because you can't do one without the other. Meaning you can't go after CPAs, financial advisors, family will attorney, or insurance if you don't have referrals to give them.
Right. I agree.
Right. So, but where those referrals come from? They come from your database. But you've got to understand how to cultivate the relationships with your database to be able to pull those referrals out. And the client concierge system has a 30-day money back guarantee. So it's 29 modules that I've built out. I've laid out also for you every script, verbal script, every email template, every text template, every technology stack that I do on each one. So you'll have that at your fingertips. So I'll email it to you.
Okay. That'd be great.
Cool. All right. Got time for one more question.
All right. So here's a curveball I'll throw you. So born and raised in New York, doing business there my whole life. July of 22, moved down to Charlotte.
Nice.
Just wanted to change. My wife is able to work remotely, so it triggered us to do that. So now 99% of my business is still New York. My whole book is New York. I don't really know a lot of people down here yet because I'm an 18-month-old. I didn't get out much. I'll slowly meet people down here, but moving down here, my goal wasn't to recreate business. I knew it would happen organically, meeting people. So that's been a little bit of a challenge too. I guess. So I want to regrow a business in a new market,
To me, it's referrals.
Yeah.
So if you meet a financial advisor here locally where you live now, but you refer them a client that is in New York, they're still going to accept their money.
Sure. Yeah.
A CPA that you meet here locally in your hometown, and you refer them a client that is in New York, they're still going to accept that referral. Mm-hmm. Insurance, same thing. Family will attorney, same thing. So my advice to you is really go deep dive into the 6-lane highway and building those 6-lane referral streams locally in your hometown, utilizing referrals, and then also utilizing and learning how to really cultivate your database from the New York area. And what you'll learn is the wealth advisors that are locally in town here, they'll connect you with other realtors and other people that are locally in town. And that's how you'll be able to grow very easily. No, it won't cost you anything.
Plus, there's a huge mass exit from New York coming down south. So that's a plus too.
Absolutely. All right. So here's what I want to do. I want to send a text to Bill and Kevin. So I'm going to do like this and give me like, pull the book up, do you mind?
Okay.
All right. I'll send it to him, and yeah, I'll send it to him today. So I'm
Cool.
sure like, I was talking to Kevin yesterday via text. So he's a great guy.
Yeah.
Cool. All right, brother. Well, keep an eye out for the email I'll send you.
All right,
And
thanks for your time.
love to see you in the academy. All right. Cheers.
So thank you so much for listening today. It means a lot you took time out of your day. I don't take that lightly. Understand very clearly that you're very busy. With that being said, if you want to continue your journey and learn more about 24/7 Mindset, if you're on Facebook, which I'm going to guess you are, then go to 24/7 Mindset on Facebook and join the private community. I do coaching tips on there on a daily basis, but from scripts on there to systems on there, models, and the ability to be able to grow and scale a business while you have a quality of life. Hope to see you there.